Hello guys, welcome to my channel. In this video, I'm going to be showing you how can you use your H4 or your H4 time frame or your candles to determine the bias for the next couple of hours, right? Or days, sometimes days, depending on the setup, right? So first thing first, before we do a lot of things, we need to see what's happening in this market so we can go on our daily. So we get the overall. Before we start, we need to get our overall. Okay, daily we have this. Where is it going? Where is it going? Oh, actually we had this. Right, let's say we had that high. So now the algorithm was sending price higher, right? So now let's say we saw the price that was going higher on a daily. So now we're gonna be using from where? You're gonna use from there to here, right? But overall we see it was coming here, right? So we're gonna start from here. So from here we know, let's say we are here, right? And then we see prices going to that point. Why? Because you have something like this there, right? And then once you have something like this, it makes sense. You're gonna have let's say 1, 2, 3. Then maybe they sell again. Then they try to sell. So the smart money, they will go and hunt that high there. Oh, the highs, everything above those highs there, we have liquidity, right? So already from there, we had an idea which it was going to that thing there. So now we're gonna drop to 4 hour and see how can we use that time frame to get to that point, that area there, understand? So it's important to always know where these markets are going, right? So that's our step one. And step two, we can start from where? Okay, usually I don't trade on higher time frames like this one, right? But I know for sure there's a confirmation on that time frame. There's a confirmation on how we can get involved there, right? But I know normally people, what they do, they wait for the market to come there, right? And then normally they wait for it to come all the way down there, right? And that's not necessary. These markets are engineered, so it's all about liquidity, right? It's all about liquidity. So normally, lower time frame, you can get an entry there. There are a lot of techniques. There's a technique that I use in which I could see this market just gonna go higher already from here. I was gonna see we're gonna come here, even above there, right? But now let's start, right? So now we saw it was going higher, right? From that low. So now what you wanna be looking for, right, is you're gonna have that, and then you have a pullback, and then it goes higher, right? Then let me remove this because we are here, right? So you're gonna have something like this. Where can I hide? Okay. So you're gonna have something like this. So if it's going higher, obviously it's gonna retrace, and when it retraces, it's gonna be hunting for that, right? Actually, the buy stops around here. Understand? Because the thing, the algorithm knows. We see some people, they do what the support and resistance thing, the breakout. They know if you buy the breakouts, they place their stops. Most of the times they do place it below or they understand. So from there, we can get those breakouts. So the algorithm, it knows with the people. Normally the big banks, you know what the banks do? The banks, this is what they do because they know it's okay. They, like, let's say they saw it as a buying market. They wouldn't mind to place their buys as the market, it breaks that high. And then their stop just below here, right? And then they know it's gonna go higher, and then they can set a crazy target. You understand? That's what the banks do. But normally, because they have large funds, you understand? So now me and you, I don't think we can do that, right? Even if you can, but it's useless to do that. So that's why always you wanna be in around here before we even trade higher there, right? So that our stops can be like this, right? Instead of buying there, and only banks do this. Only banks, they do that, right? So now we want to be buying this pullback, right? So first of all, you see it's going higher. So now we want to be buying the pullback, right? So now that's where we're going to be using our 4-hour time frame, our 4-hour candles to see, you could see where this market is likely to go, right? So the banks, what they normally do, they just want the breakout here, or maybe this was a retest, but the stops, I know it's always there. And then they can set the crazy target. Like the same targets that we have in that side, they can use the very same target. They can target those highs there, even higher. You understand? But personally, I wouldn't do that. Lower time frame, I want to be in before we even take out that high. No? So now what we do, we're gonna go. So first of all, you understand that pullback, right? So now we want to be buying here. We're gonna be looking for buys. So now we're gonna be looking for buys. I'm gonna show you what you must look for, right? Let me remove this. Okay, right. So now that's the pullback. We know for sure it's going higher, right? And then for again, what do we have? We have that what's the suppliers or the demand zone there, right? So now again, you get another pullback. You see same thing on a higher time frame. This is a lower time frame, right? So now you want to be looking for buys, right? So here it's buying already. It's buying. Remember that pullback for the bigger thing, for a bigger trend. And now we're getting that pullback again. So again, it's buying, right? So now what you're going to be looking for. So here, exactly here, after maybe tapped that zone, after you tap that zone, here you're going to be looking for what? For that candle. You can get a candle like this, right? And then we have something like this, right? So now the next candle after that one, that's the candle that you want to be monitoring, right? So even if you get a candle like this, even if it can be, but you want to make sure what it does, it trades below, right, the previous candle. You want to make sure it trades below the previous candle, right? And then what you normally do, you'll take the previous candle's range, the range from the week low to the week high, right? That's the range that you're going to be looking for. You take it higher like that, right? So now once the next candle, which is this one, the next candle, what will happen? If it trades below the previous candle's low, right? It trades below that range, then it comes back. So now what you want to be looking for, you want to see it coming back, and then even if it closed here, here or here, as long as it's within the range, right? You don't want to see it closing there, as long as it's within this range, right? As long, even if it closed there, you can be a buyer. Exactly where it closes, you can be a buyer there. Your stop is gonna be below that low, right? Then your target, you can be targeting this, or you target whatever that you're gonna be targeting, right? So the idea is what? The candle, right? You're gonna have one candle, then the next candle, but keep in mind that already it's a buy market, right? So you're gonna have something like this. The market, it trades below that wick, right? Then what you do, you draw your range like this, right? From the week high, all right, to the week low. So, right, and then you want to see the market trading like this. And when it closes, it can close anywhere, right? Even if this week it was here, still okay, as long the body is still within that range, right? So as long the body is still within that range, can be a buyer there. You understand? So that's what you want to be looking for, right? So now let's start. So you're going to be starting from here, right? So we're going to see. So with this thing, you can generate a nice system close to 90-something%, depending on your understanding on the markets. But if you understand liquidity and everything, it can be close to 90-something%, close to 97, close to 97, right? The winning rate can be close to 97%. So now let's see. So let's start here, right? Already you see it's buying, right? You see the candle. we trade below the low like that. That's what you want to see. We trade below the low, and then let's highlight the range. The range is going to be from that candle's high to that candle's low, right? Something like that. But now we said we want to see this candle closing within that range, not outside, right? So for this one, it closed outside. So for this one, we don't say this one. We move on, right? So if you use, because I said 4 hours, basically on 4 hour, then we move, right? Let's move and see. Always you want to be trading on the pullbacks, right? You want to be trading on the pullbacks. Let's look for another pullback. Then we found another pullback, right? And then we see that's coming where? That's coming back actually here on the higher time frame. I know for sure we have a candlestick there, right? So already it's buying, right? So your forecast here should be running the next liquidity point, right? But now we're going to be using the very same idea here, right? So now let's see what happened already. That's buying. There's no need for you to try to catch this one, right? You can just monitor and do exactly what I'm telling you to do, right? It goes higher, and then it trades below the range there, but now it closed higher, right? We don't take that one. Even here, right? I usually don't take these ones, right? And then we move, because you need to have a specific rules, right? Specific rules. So if you don't see that, you're not gonna be trading, right? And then you move. We find another pullback here, right? Where is it coming back to? It's coming back to that thing there, right? And then you wanna be looking for what? 4 hour candle. You see there, it liquidates that low, right? What you do, you take the range from that range high to range low, like this, right? And then you check, did it close within? It closed within the previous candle's range. So exactly where it closes, you can be a buyer on the specific time frame. You can buy there, your stop just below that low, and then you want to be running for that or even more, right? And then boom, right? So far from where? Okay, from there to there, that's where we got the first one, right? Now we move again, because you need to understand something. These markets, you can have a market like this. Some markets, they move like this. They are simple, they move like that, right? Then you're gonna get some markets which they move like this, right? Some markets like Nasdaq, right? So sometimes you don't see how can you get involved, right? You don't see how can you get involved. But I'm gonna show you what can you do again. Already that candle, you know for sure that it's a demand, right? Once you get a candle like that, you have something like that, you know for sure it's buying on that candle. So you don't try, you're not trying to catch that. What you're gonna be doing, you wanna be looking for that low, right? You see here, we took that low out, and then we closed within the previous candle's range from there to there, right? You have something like this. So we take that low, and then this candle, it closed within that range. So from there, you can be a buyer. Boom, right? These are these kinds of markets, right? You can be a buyer there. It goes higher, but normally look for pullbacks, areas like this, right? So once you get an area like this, there's no need for you to be to be like already, you know for sure you wanna be buying there. Nah, just wait a bit, right? Don't even place a buy limit or whatever. Wait a bit and monitor the lows, right? Already it was buying. See the candle. What happened? It liquidates. You wonder what the range from there, right? The next candle, it liquidates the previous candle's low, comes back from there. You're a buyer to where it runs that point there. Understand? We move, it comes back again. It's coming back to where? Deeper into these levels, right? Someone can be what? Someone can just be buying here, right? That's still okay. Someone can be just buying here. But with what I'm showing you here, there's no need for you to be buying there. What you need to do, you just need to look for what I'm showing you here. It takes out that candle slow, right? Specifically on your 4 hour, and then your range is from week high to week low, right? Week high to week low of that. Then you check this one, did it close within the range? That's why it closed. Then you can be a buyer, right? Why are we still buying? Remember our target on our daily, right? Remember our target on our daily. Then you can be a buyer there again. You understand? And then obviously here, if it closed, you see here, it did take out that low, but it didn't close where I want to see it closing. I specifically want to see it closing within the previous candles range. That's what I want to see, right? Then it goes higher, then pullbacks. You just want to be trading the pullbacks. You can get short opportunities. There are a lot of ways you can get short opportunities. Equal lows here, simple. But now that's not part of the video. Here I'm just showing you what to do. Again, you can get a confirmation here. But personally, I want you to focus on what the pullbacks. You just want to be looking for pullbacks, right? Now we have that to here, from here to there, from there to here, right? That's our focus. We have that pullback, right? So now let's monitor our things. Okay, here, what did he have? The black one, you see what happened? It took that, but it closed outside. You see where it closed? It closed outside that previous candles range. The previous candles range is from where? It's from that high to that low, right? You see that low, the close, see it was below that low. So that's why I don't take it. That's why I'm precise when it comes to my rules. That's why I say make sure it closes within the range, right? To avoid things like this, right? But if you understand liquidity and stuff, you will understand what was happening, right? Because this movie that's actually supposed to come, that movie that's actually supposed to come in, right? Now here, there was no setup for you. It was gonna be this one to run that high, but unfortunately it didn't do what I'm saying it must do. Move on, another pullback again here, coming back to where? To deeper areas, right? Already, the conclusion is buying. So now you're gonna be looking for what? For buying opportunities, right? There's no need for you to be a buyer here. What you can be doing, just go and look for what? For the low. The previous candle, it gets liquidated, and then range high from week high to week low, right? Of which candle? Of that candle, né? Then you wanna see the market there. Then the close, is it within that candle's range? Yes. And then you can be a buyer. Your stop is gonna be where? Your stop is gonna be just below that low. Instead of your stop being, because if you buy here, if you're using this specific time frame, we understand the stop needs to be below, right? But read what I'm showing you, the stop can be just there, and then it goes higher. You understand? It can be there, and then it goes high. And then again, in your mind, we know for sure from there, your target, where's your target? We want to see it running at least here, right? So meaning if we see another buying opportunities on the specific time frame, we want to take it, understand? Now we go again, right here. Let's move this, right? And then we're gonna have what? You see here what happened. It did break, it did take out that low. Come on. It did take out that low, right? After taking out that low, did it close? Yes, it did close. So here you can be a buyer, your stop here, right? But you see what happened, they did come for your stop, right? So let's say they come back for your stop, you get stopped out from there, right? Let's say you get stopped out from there, and then let's say maybe here our target was still that one, right? You get stopped out today, still okay, we get a -1, but when you check the next candle again, it delivers the very same price action, right? So let's say here we get a -1, right? That's our -1. Next candle, what did it do? Okay, let me remove this one so that you see. The next candle, it did the very same thing, right? And then it closed within the previous candle's range. So we can be a buyer. We can be buying this market. Understand? So already here you're a buyer, and then you had a -1. So already, I think with this candle, whatever that you lost is already back with only this one candle. Understand? And then it goes higher, higher, higher. All right, it goes higher. They liquidate that low. Then again, they come back to that because they understand that the supply, that's a demand zone. At this levels there, you have the demand zone, right? So there's no need for you to do what? To be trying to catch. There's no need for you to try to catch what? Those wicks there. Understand? So what you can do, you come here. What they did, they liquidated that low, right? So here I'm showing you reality. This is what will happen. You liquidate that low, and then you can be a buyer with your expectations of doing what? Because this is what is happening in this market. This thing, you don't need to cram it. Understand? You don't need to cram it. These markets are engineered, right? So now let's say you're buying. Obviously, your expectation is to run that high, right? Then let's say you buy here, but now then it comes deeper, right? But now we know for sure if you know liquidity. That's why I said if you understand everything like liquidity and stuff, you can always expect these moves, right? You can always expect these moves, right? So now what happened, and again during if you're trading with sessions, right? I think the sessions are important because normally we know around New York, that's where they normally liquidate the lows, right? You might find out it might be London, but let's say maybe it was M15, it might be London, and then around New York, they liquidate that low, right? But it's still bullish overall, it's still bullish. Understand? So that's why I said pullbacks. Understand the pullbacks. So now let's say you get liquidated, you move and then it goes higher, right? And then what happened again here? It closed above, and then there was no trade for you there, but there was a trade. Okay, but it's not part of this video. There was no trade, right? So you need to be strict, right? So your consistency will only come, you'll only see consistency if you become strict and you stick to your rules, right? So if I say I'm gonna be taking trades like that, it means I need to be taking trades like that for the whole of the week, right? I don't need to be like, okay, maybe try to catch this ones now. If I'm gonna be using that, I'm gonna use that throughout the whole week, right? And then I'm gonna see whether was it profitable or what, right? So now I gain another pullback. Okay, here higher time frame. I know it was a pullback on a higher time frame, right? Coming back to deeper levels there. Again, you can be a buyer. You know for sure there's a way you can buy. There they liquidate that low. I hope now you see, right? After they liquidate that low, did they close there? It closed there. You can be a buyer looking to run to those highs there. Boom. And then you run the highs, right? It comes back to deeper levels, right? So you need to understand here you have a lot of trends. There's a trend here, right? Those smaller pullbacks. There's a trend there, and then you have this big trend. You understand? So we have something like this. You understand? So normally these are the ones that you will hold because you are looking forward for the markets to run that next liquidity point, which is that high, right? Normally you would hold these ones, but these ones you were looking forward because you're trading the smaller trend. So your target should be above there. So there was no need, like there was no reason for you to be buying them. When the market gets to this area and then it comes back and then you're still holding, there was no need for that because you expect a deeper retracement on a higher time frame. So this is the higher time frame, right? Then from here again, we can be looking for longs again, right? Already we know we are buying, right? We come the candle. Let me take this one there. Right, so you're gonna have this, you liquidate the low, the range, that's the range, right? You liquidated and then closed here within the previous candle's range. So from there, where it closes, you can be a buyer. Your thing, you want to be taking the market to the thing there, right? And then buy and see if it comes. And then it did come back but deeper, right? But just stop if it was still there. I think it was still safe. Now they came back, they liquidated that low, but from there to there on your 4-hour, I think how many pips? From, let's say, maybe from there to there, even though it wasn't a lot, yeah, close to 115, close to 1.8, 110 pips. See, so how can you allow a trade to come back from 110 pips? You wouldn't. Obviously, you want to be trading somewhere. Maybe it takes you out. Right now, let's move. It's still buying, right? Because it's coming back deeper to which levels actually. It's still here. That's why here it's still part of this liquidity equal lows there. This was expected, right? Then now we want to be buying, right? So now we want to see if you want to get what you want to get. There was nothing there, and then this one it liquidated, but the close it was above, so no trade for you there. So it works, but it don't work all of the times, right? So that's why you need to have specific rules. Understand? You need to have specific rules. So let's go to current market price. You need to have specific rules. You see markets like this ones. You see markets like this ones, for example, here, what you're supposed to do, it's simple. What you're supposed to do already coming deeper to that zone, right? So already it's buying and liquidated. So already was buying equal lows here. So just come here, just gonna be monitoring the what takes that, right? So you'll have to trust it. You'll have to trust it. It takes that low and then it closes within that, right? So once it does that, you're gonna have something like this, right? So already here, you're a buyer, your stop it's here, right? And then if you're still targeting what? Because the target was to trade to that guy there. So once maybe we're there, because it was after we liquidated that low, the stop just above below that low, then you just target that you're still okay, right? Because you see this market, these ones is a heavy markets. Now these are heavy markets. Why do we call them heavy markets? Heavy markets because what they do, they don't liquidate the lows, right? They protect all those lows there. So these are heavy markets. It's showing us that it's heavy. There's no need for smart money to send price lower. So heavy markets, it means it will run smoothly like that. You won't get what? Something like this. Let me show you so that you understand what I'm saying, right? Okay, heavy markets. Right, heavy markets are markets which are moving like this, right? These are your heavy markets. They're heavy, right? You know they're gonna protect the lows. And then you're gonna have markets which are gonna be moving like this, you understand? Somewhere, and then they liquidate that low, right? That's where you take advantage of what? The larger pullback. Then you wanna be looking for what I was showing you here to target the next liquidity point. You understand? So yeah, I hope you enjoy this one. So it's basically on your 4-hour. Don't try to do it anyway. 4-hour, then you can be a buyer there. And even if you go on the lower time frames, and then you know the dollar is bullish, so it was wise to be buying this market. And then what else? Yeah, I think I'll stop there. So don't forget the most important thing for you to do, just to know where the market is going, right? And then you make sure you look for your pullbacks, right? You make sure you want to be looking for your pullbacks, right? Make sure you want to be looking for your pullbacks. You want to be buying here, and then at your pullbacks, you make sure you have something which is supporting you to be buying the market, something like that. Like what? You must make sure maybe here you might have a demand zone, maybe there, right? So already the market is willing to go high, right? So if it's willing to go high, and then you look for what I was showing you here, and then you want to do what? You want to be taking your profits at this high there. You understand? That's what you want to be looking for. So you want to be buying before the banks. The banks, they're going to be in here, right? they want to be buying here. The banks, they have a lot of money. That's why they can buy there, and then the stock is gonna be there, right? But we don't want to do that. We want to be buying there already at the cheaper price. Understand? Affordable price, we can manage that, and then our stop is gonna be based on that candle. Understand? So yeah, and then here you wanna be looking for what? You wanna see a candle, right? And then the week, the next candle after that one, right? The week, it must liquidate at low on your 4-hour, on your 4-hour. Listen carefully, on your 4-hour. It liquidates at low. Then from there, right? Okay, let's take because we liquidated at low. Then we take the range from what? The week high of this candle, like this one, to week low, like that. Right. And then we want to see this one, the close. Then we focus on the body, not the wick. The wick, even if it was here, understand, the most important thing is the body. We don't want to see the body closing above, right? Even though you saw some of the examples, they have a body and then they continue going higher. But specifically, I know why I'm saying make sure it's here. And then the wick, this week, you don't care whether it's there or it's still here. But the most important thing is what's happening here, right? So you can be buying, can even target this one and even higher. Understand? So I hope you enjoyed this one. Don't forget to share the video. See you next week.